Very good evening, ladies and gentlemen. Thank you very much for tuning in. I'm Sneha Koshy, and you're watching the Urban Debate. Well, ladies and gentlemen, global markets are bleeding. There's been a bloodbath in most global markets. Major indices around the world have nosedived, with Hong Kong's Hang Seng Index experiencing the worst. Taiwan, Japan, Singapore, China among the worst. Europe didn't seem insulated either. But our focus today, ladies and gentlemen, is India, where the markets have taken a big hit. Indian equity markets opened to a 10-month low, wiping out investor wealth of over 20 lakh crore rupees within 10 seconds. Sensex opened nearly 4,000 points lower, sliding over 3.5% since its last trading session, while Nifty tanked over 1,000 points this morning itself. Nifty ended 740 points lower in 13 lakh crore rupees rout, but recovered from the lows. Nifty had only two stocks in green, Hindustan Unilever and Zomato. At Sensex, it was only one stock in green. Escalating trade tensions and fears of a recession driven by President Donald Trump's extensive tariffs on various nations, including a 26% on India. These seem to be just about the big concerns. Trump earlier called his reciprocal tariffs as a medicine to fix the problem. Today, amid the bloodbath, global bloodbath quite literally, he shot out his warning once again, targeting countries like China that have also announced tariffs in retaliation to United States hikes. So, where is India amid all of this? Is there a silver line? Has India been able to ward off what could have been much worse? Or is there more? Remember, the red isn't just recent. Over the last few months, there have been record lows. A month ago, Indian markets sank to 2024 lows as Sensex plunged 1,414 points and investors lost 9 lakh crore rupees. So what does this mean for you and me? What does this mean for our money and for India? I'm being joined by Ambrish Baliga right now, who is a market expert. Manish Barriarr joins us, who is a political analyst. And I'm also going to be shortly joined by PK Basu, who's an independent economist. Thank you very much, all of you, for joining me. Ambrish Baliga, let's just start with this one question. How do you break down what's happened over the last few years? There are people who have panicked. There's crores of money that has been just wiped off. Recoveries have been made, but it's still bleeding.
I mean, people who have not booked profits when the markets were making new highs in September last year, when the valuations were going through the roof, and they have just held on to the stocks or bought at those levels, I think today their portfolios are mostly in red. In fact, at that point of time, I was asking most of my subscribers, most of my clients to get into about 40% in cash. And basically that cash can be utilized in falls like this. I mean, last time the markets fell to about 22,000 levels, we bought, and then we saw a decent jump. So again, now, this is a buying opportunity. This is not a time to panic. But then those who are sitting on a portfolio which is full of, and they don't have any further cash to invest, it's quite natural for them to panic. And that's exactly what's been happening. But one good thing, let me tell you, in today's market, I mean, the market did not open at a certain level and then fall from there. It opened with a gap down. So nobody sold in that 900 point difference between Friday's closing and Monday's opening. And after it opened lower, it did not fall much from those levels. I mean, it was moving in a 200-point Nifty range. That shows that there was decent amount of buying by smart investors at those lower levels. And that was, I think, reconfirmed in the last 15 minutes of trade when we saw a deep jump from lower levels. So that shows that there was decent amount of buying happening today.
So Ambrish, before I go to the other two panelists, very quick question. So are you then saying that keep your money invested in the market, don't pull it out? I mean, for those who barely have any left in the market in the sense, I mean, it's a day of tears, quite literally, despite, however, we say that India has been resilient, the markets have responded better than what many global markets would have responded. The fact is that India is bleeding. The markets have literally have gone red in a very, very terrible manner. So in a layman's perspective, for people who are watching, should they keep their money invested? Should they still go on to buy, is what you're saying?
One should buy because, again, I mean, this is backed by logic. Because if you look at what's happened post those tariff imposition, clearly India is in a much better position as compared to peers. Normally, when you're investing in markets, you normally compare as to where you stand vis-a-vis your peers and the rest of the world. So India is much better placed because of the tariff differentials, number one. Number two, it is more of a domestic consumption economy as compared to the peers. So we are not as affected as them. Then, I mean, if you see, last week we had the trade delegation from US. So that means that there can be a possible trade agreement between US and India, which again, not many other countries are able to have. So that's another positive. And in the last, I mean, couple of days, we have seen that the commodities have fallen, including crude, which again is a positive for India. And going ahead, we are talking of possible interest rate cuts. When the RBI announces the policy, I think 25 basis points is taken for granted. We may have a surprise 50 basis points. If that happens, that's another positive for the Indian markets. So at these levels, I see that the downside is quite limited. And if you have money to spare, if you don't invest now, you'll never win.
Okay, that's interesting. You say crude has actually dropped, but you've had hike in petrol and diesel prices over the last few hours in India. We'll get to that in a bit. PK Basu, good evening. Thank you very much for joining us. Manish Barriarr, my question to you, and we just heard Mr. Ambrish speak about this as well. Mr. Ambrish spoke about how India is already leveraging its position. It's not as bad as other countries are feeling it. And of course, US-India trade ties, the talks are already on its way. But, you know, this is what I want to ask you, Mr. Barriarr. Can India insulate itself enough from what's likely to fall out? You have the recession, which is right there. In fact, the latest projections over the last 6 hours, including some top projectors for that matter, have already said US is going to hit recession this year. There are talks of recession across the world, trade wars that are only going to peak going forward, retaliations that are going to only increase. PK Basu, I can hear you disagree completely. You're shaking your head. But Manish Barriarr, do you think India will be able to withstand this?
So not so good evening to you and my co-panelists. It's very tough times. But then I think I think the first thing the government should do is show leadership and calm the sentiments of the people of this country. We have a large domestic market. The countries, for example, Hang Seng in Hong Kong, it lost 10%. And some of the South Asian markets and some of the Asian markets are very deeply linked with export. They are export markets. But we also do substantial export. But I think our domestic consumption is also there. I can't say that you can really, in this world, globalized world, you can de-link what's happening in US to the rest of the world. So we are going to get impact for sure, and we are facing that impact. But I think we would be better off. What I'm worried that India should not be in the crossfire of US versus China trade war. I think the government is playing very smartly, and we have to continue doing that because we have a substantial trade with China also. So we would have to really, kind of move away from US, because it is in that situation. And India is having talks. I remember having a conversation with you once that we are now having talks with UK, with European Union. And, we will have to really diversify our trade basket, focus on that. And this is a time where the government of India will also have to show a bit of magnanimity. So in terms of tax breaks, in terms of giving more SOPs for foreign investors, FDI, I think India will have to really take some proactive steps to ensure that whatever damages which are being done, that can be taken off. But I feel that if there is a recession in US, there's hardly any country that would really, not face the heat.
Manish Barriarr, I know you've spoken about India taking leadership, India taking the reins in its hands. You've spoken about how India needs to move beyond United States. But even as the crude prices have really been falling, you have petrol and diesel prices and the LPG that's only been hiked. How do you look at this? Is it like kind of coming at a double whammy for the consumer? Of course, the government has said this is not going to be transferred to the consumers. It's going to be absorbed by the system itself. But long term, do you see this as a well calculated move, as the opposition is saying it's just as a double whammy?
So short term crude prices might have gone up, but I feel that long term, because if you look at US, it is going to flood market even in terms of its energy. So they want to export to India, and that is what is the talk happening, that you buy our oil. So when US comes up with that kind of oil to the market, you can see the prices not firming up. To the contrary, it might actually go down. And historically, we have seen that whenever there is a recession, oil prices come down. So, I feel to the contrary that oil prices, if recession is there, it's going to come down. I don't think oil is going to be a big headache for our country in long term. It's going to be the trade, and how it's going to shape up. It's very dynamic right now, in a flux. It's very difficult to know.
PK Basu, would you agree to what Manish Barriarr has said? I mean, at the end of the day, let's just look at this. Just bare about 3 stocks in total between sensex and Nifty that have managed to be in green. Everything else is in red.
Well, of course, today there's a massive sell-off in global markets, and that is a consequence of this so-called fear of a US or global recession. I think these fears are completely overblown. There's going to be no US recession. There is going to be a slowdown. There's no doubt that economic growth will decelerate significantly in the US as a result of this. The Trump administration is willing to take the hit in terms of growth because it is focused on the longer term imperative of boosting its own manufacturing sector, which has been hollowed out over the last 40 years, especially by China. I think the US is quite willing to negotiate mutual tariff reductions with most countries. We know that the US is already talking to India. Vietnam has said very openly that it is willing to discuss substantial reductions in tariffs that it charges the US. So, globally, the only country that has retaliated is China. And China is going to face a significant crisis now because China has a massive oversupply of every kind of industry. It has oversupply of real estate, about double the amount of real estate as there is demand for. So all of this is going to come to a head now, and escalating the trade war with the US is completely foolish for China. It just shoots itself in the foot. Broadly speaking, I completely agree that this is a buying opportunity in India. In fact, I've been looking for my own personal portfolio to try and add to it. And this is not a time to sell. This is a time to add and look for good bargains after an irrational sell-off over the last 2 or 3 trading days.
Okay, I think I'll get back to you in a bit to ask you what are your top picks to just get a sense for our viewers. But very quickly, I mean, you spoke about it being an overblown estimate. That's very interesting because the truth is, over the last 24 hours, Mr. PK Basu, there are several projections from renowned economic bodies that have already foretold of a recession in the United States. You are saying it's overblown estimates, but at least the projections that are out do not concur with what you are saying. But let me just come to you at this point, Ambarish. Okay. Ambarish, for what's happening in United States, let's just also look at what's happening in India. The fact is, over the last few months, there have been lows after lows after lows when it comes to the Indian market as well. With the rupee, there have been record lows. With the markets, there have been lows as well. In fact, it was, I think, just a month back that we were speaking about how we've reached the 2024 levels. Right. I mean, of course, the impact and the variations were different. But here's the thing. For a very long time, people were talking about the bubble being corrected, the bubble being burst, the course correction that would happen. How much of what's being seen right now is a part of that larger course correction or a bubble burst, or is it way beyond that?
No, I think most of the course correction has happened as of now. The way I see it is, we were at what 26,000 plus on the Nifty in September, and from there we have come down to below 22,000, which is a good 16% sort of a correction from the high. So I think most of the course correction has been done. Now, will we see a V-shaped recovery? May not be. But do I see, possibly another 1,000 fall from here? I mean, no one can really call a bottom. So it's very much possible that we can see some more correction from here, but it will not be a very, very sharp sell-off. And after this, possibly we could have more of a consolidation sideways for the rest of the year, which can actually tire out a lot of investors. But like I said, I think it's a great time to buy if you're a long-term investor. I think what we are seeing now is more of a fire sale. So utilize that opportunity.
Okay, Manish Barriarr, contrary to what the projections for United States has been, the projections for India has been quite different in the sense that we're talking about strong macroeconomics, at least that's what the projections are seeming. The GDP recovery seems to be better, at least that's what the projection seems to estimate. Now, Manish Barriarr, what's in stock for India? How is India likely to tackle this? Because at the end of the day, remember, if there's a recession is going to hit India. The trade wars is going to hit India. All of these may provide for opportunities in disguise for India in its own way, like even PK Basu spoke about, whether it be textiles, whether it be the iPhones, or several other sectors, pharmaceuticals for that matter, that is likely to benefit as well. But Mr. Manish Barriarr, at this point, when a common man is sitting there possibly out of job, possibly with lower incomes, as the reports have been suggesting, possibly looking at a recession and possibly now looking at bleeding markets, what's the credentials really that one needs to stand on?
So I am a bit, not that highly optimistic in this case, because I think this is going to pan out longer. This is my own personal opinion, and I find that in this entire tariff war, there is a bit of geopolitics that is being played. If one looks at US, they have been dominant for the last 100, 150 years. And I think they are losing out to China, whether it is tech and China is becoming quite rich. And I think US, somehow they've understood that China has taken advantage of this entire tariff, one-way tariff, and they're becoming richer. They are investing in military, they are investing in influencing other countries. And it is no-brainer to understand that China is now on equal footing, maybe ahead. A lot of people say that China is way ahead of US. So US is actually losing the edge. I feel that the rest of the world, unfortunately, has got caught up in this. And a lot would depend. I think the lever's in the hands of China and US and not in India's hand. Okay. What we can do best is to really leverage, as Mr. Basu was saying, and Mr. Ambarish was saying, that I think we have to look at inward and outward to other countries and be very strategically involved with other countries, the countries that have been less in the heat. For example, European Union is not that much in heat. They don't really get impacted as much. Britain also doesn't get impacted as much. Even India, a lot of experts feel, even I feel, that we not get impacted too much. We are talking, and there is some kind of a reciprocal other things. Like we have not been hit.
All right, we seem to have lost the signal with Manish Barriarr. We'll try and get to it. PK Basu, very quickly to you, and I think this was one question to all three of you. One being, what would be the top picks? Do you look at any stocks that may offer any potential stability over the next few weeks in the long term as well? What would be your top picks, and what would be your one big advice to people who are watching you? PK Basu, let's start with you since you're already on the lookout for your portfolio.
So, I'd be looking at pharmaceuticals, for instance, Aurobindo Pharma or Dr. Reddy's. I'd be looking at things like Mahindra and Mahindra, the tractors, farm equipment are not subject. All automobiles except farm equipment are subject to tariffs in the US. The world's biggest tractor manufacturer is Mahindra, so they'll be a winner. So yeah, I mean, so there are lots of opportunities like this. But I think, just addressing the point of whether China is about to take over the world, I think the Chinese, you should realize that
15 seconds, sir.
China's
I need to go
foreign
to the
exchange
rest.
reserve. No. China's foreign exchange reserves peaked 10 years ago in June 2014. China's foreign exchange reserves have declined by almost $1 trillion from June 2014 until now. So if China, every year China runs a trade surplus, but its people take their money out. And it's mainly the Communist Party members who take their money out. So those who know, the insiders, this is a classic form of insider trading. The insiders, Communist Party members, take money out in suitcases and buy real estate in the US, in Singapore, in Australia, in London, etc. So they are voting with their feet. They are taking their money out of this country. So do not believe this propaganda about China, becoming dominant, the new dominant economy. That's just 10% of the Chinese population is participating in this. More than half the population lives in rural areas, is still very poor, doesn't have access to cheap education, cheap healthcare, and therefore they all, I know,
get that.
one of my
I get
cousins
the
is
picture,
married to a
PK
Chinese
Basu. I
person.
get the picture,
They all
whether it be
leave
insider
China.
training, whether it be tech, whether it be industries for that matter. I get the picture that you really are trying to portray, but there's also a flip side. Unfortunately, I go to Ambrish whether he agrees with you on that, but there's also a flip side, and you just have seen how US and China have not only faced off over the markets or trade for that matter, have also faced off over deep tech for that matter. So there is the other aspect of what you are portraying. But Amrish Baliga, the same question to you. What's the top picks that you're looking at? Do you see any sector that could offer potential stability? PK Basu, I can still see you disagree with what I'm saying, but Amrish Baliga, over to you.
A number of sectors, but I'll just talk about, 3 or 4 sectors. Consumption, which is basically manufacture local, buy local. I think this is a theme which should play out in the background of tariff wars. Specialty chemicals is the other one where China has been a major supplier. So with the disadvantage which China has now, I think India should come up there. Pharma, again, there are talks of tariffs, but it may not come after the sort of protests which we have seen in the last 2 days in US. And especially they won't like to, hike the medical costs for a common American. And as far as IT is concerned, I think the fears have been overdone with the sort of fall which you have seen. So that becomes a decent buy at the current levels.
Oh, that's interesting. Why are you saying IT is overdone? Would you want to explain that? Because a lot of people are really talking about that.
IT has been affected because of the sentiment issue. The sentiment is linked to recession. There are no tariffs on IT services. And in IT, basically...
That's true, but recession is impending, isn't it? I mean, long-term recession is likely to be a reality. So in that sense, it's unlikely that it's overdone.
Let me explain that to you. In IT, you have 2 types of orders which keep coming in. One is discretionary orders, and the other one is non-discretionary. The non-discretionary orders need to come in either ways because you need to keep your systems up and running. Okay. The discretionary orders are the ones which can reduce, but they will not become zero. And the way markets are portraying that IT is in for trouble, it may not be that bad as what the markets are portraying right now.
I think that's an interesting take. It'll be very interesting to pursue and see how this really unfolds, whether you hold true. If what you're saying holds true, I think a lot of people will heave a sigh of relief, whether it be in markets or real time. Thank you very much, PK Basu, for being a sport and taking on those questions. Manish Barriarr, thank you very much for joining us. And of course, Ambrish Baliga, thank you very much for your insights. It's time for a short break. On the other side, my colleague Ritankshu joins us.